There are many things that make up a suburb that it's warming up for a boom. In today's episode, we're running through the top 5 metrics that I look at when identifying suburbs that are going to move next. Ladies and gentlemen, welcome to another episode of PropSpotter. PropSpotter, the smarter way home. Now, what are the 5 key metrics? Number 1, affordability index. Years to own is pretty crucial to price growth. It justifies how many years it takes for people earning a median wage in that suburb to be able to afford a home based on current interest rates and typical property prices in the area on a standard 30-year mortgage. You want this number to be as low as possible, generally under 30, right? Where it is under 30, it basically means that homes in the suburb are very affordable compared to the relative median income, and people can easily afford to buy and also afford any future price increases. 30 to 40 is still an acceptable range, but once it starts to get over 40, it basically means that the housing stock is out of reach for the local population. That will make it difficult to justify any future price increases unless people from suburbs outside the area are getting in. The second metric that I look at is the vacancy rate. The vacancy rate is essentially the current rental stock on the market that is older than 21 days still available on the market. It allows you to better understand the turnover of rental listings in order to make the right decision on your property journey. In most of Metro Hobart, we're seeing sub 1% vacancy rates. And so properties are getting rented out even before the properties themselves are settled. The lower the vacancy rate, the more price elasticity you have on yield. And therefore, people are willing to pay more to get your property if the vacancy rate is lower, and therefore investors pay a property price based on the outgoing yields of the area, and so you will see price growth in the future. The third key metric is days on market. It is defined as the median number of days the property is sat on the market before it is marked as sold. This includes the under offer period, which is when a property is under contract but still subject to certain conditions. Therefore, most properties are under offer in less time than this number. When you're looking at days on market statistics for suburbs, you ideally want to be looking at a suburb where the days on market is sitting under 35 days. That essentially means that stock in that market is selling relatively quickly. 35 to 60 days means that stock on the market is quite balanced. And when it exceeds 60 days, it means it takes a lot longer for properties to sell at their desired price, and there's very little to no demand. This in turn distracts away from price and means that once you cross the 60-day mark, vendors are likely to discount the property or probably need to discount the property in order to move it along. The fourth metric that we look at is stock on market, current and long term. In order for prices to rise, you first really need stock on market to go downwards, days on market to go downward, vacancy rate to either stay flat or go downwards, and still have a reasonable affordability index. If you've got that, you've practically got a unicorn. So you can't look at stock on market today just in isolation. You need to look in stock on market over the long term as well. And in the long term, the stock on market needs to be trending downwards. The lower the number, the better it is for you as an investor, because it means that there are less likely for stock to get back on market and for an oversupply to happen. And all you need is demand to increase and prices will rise, and they will rise relatively quickly. The fifth metric that we look at in order to go and ascertain whether or not a suburb is about to boom is price growth and price change. So what you tend to look for is an indication that over the last 12 months, prices have ticked upwards. They don't need to be massive. Number between 0 to 10% is perfectly fine. Overall, if you're new to property investing, I hope these 5 metrics are useful to you. They've certainly helped me along my journey and also helped other PropSpotter clients. If you like the content I've been putting out, a simple subscribe helps not only the channel, but the PropSpotter business too. If you're interested in getting your own investment property and have your pre-approval in order, reach out to the PropSpotter team for a chat and we'll see if we're a good fit.